This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Blowout quarter, a big earnings beat, a big dividend increase, and a really, really big buyback. Inside Apple's results and what's next for the world's most valuable company. On strike, labor tensions revived at the nation's busiest ports. But this dispute is different. And not on the menu. What Chipotle did that no other national restaurant chain has ever done before. All that and more tonight on Nightly Business Report for Monday, April 27th. Good evening, everyone, and welcome. I'm Tyler Matheson. Sue Herrera has the night off. Well, Apple did it again. The most valuable publicly traded U.S. company reported a blowout quarter, selling more than 61 million iPhones in just the first 3 months of the year, proving to investors that its smartphone sales are still going very strong. Here are the numbers, and there are a lot of them. Apple reported a 33% increase in its quarterly profit over a year ago. It pulled in $2.33 a share. That was 17 cents better than estimates. Revenue up 27%, coming in at an astonishing $58 billion, easily surpassing expectations there. And Apple is also going to give back more money to shareholders, increasing its dividend 11%. Boosting its share repurchase program by $50 billion to a total of $140 billion, and pledging to return a total of $200 billion to shareholders through buybacks and dividends by 2017. And how about that cash hoard? It now stands or sits at $194 billion. And investors initially sent shares to a new high in after-hours trading. Josh Lipton now with more on Apple's earnings and what Tim Cook told him earlier today.
The big number in Apple's latest earnings report, 61.2 million. That is the number of iPhones that Apple shipped in the quarter, and that was better than expected. Wall Street was looking for Apple to ship about 57 million iPhones. I did have the chance to sit down and speak with CEO Tim Cook, who pointed out that iPhones overall up 40% year over year. Cook also pointed out some of the growth in particular geographies, knowing that Greater China was up 70%, the US was up 20%, Mexico up 80%, and South Korea up 100%. The reason that's important is because for all the buzz and talk about Apple Watch or Apple TV, it is the iPhone that is the engine of Apple's business. It still contributes more than 50% of this company's sales. For Nightly Business Report, I'm Josh Lipton in Cupertino, California.
David Garrity is a fan of Apple. He owns Apple shares, and he's here to tell us why he thinks the stock could gain 35% or more from today's already lofty levels. He's principal at his own tech research firm, GVA Research. David, welcome, and as always, it's great to have you with us. Josh Lipton just pointed out that 50% of Apple's profits come from one product, and that is the iPhone. Is that really the way it ought to be there, or is that potentially a risk at some point?
It's been a risk that investors have been focusing on for a long time. And we would say that, to the extent that Apple has been as successful as they've been with the iPhone, if we do look at their unit numbers, they're still very small in terms of the penetration that they're having in terms of the total global market. They've probably got less than a third of the units that are out there. And if we're going to be looking at what's going to be driving economic growth globally, it's going to be the continued penetration of devices like smartphones, basically internet-enabled smart devices. And Apple clearly is the premium brand in this area. We would have to say that, yes, there is risk, but the thing that's nice to look at is we're seeing strong reception for new products, such as the Apple Watch, a device that's going to rely upon people having an iPhone to actually use. But that seems to be actually taking fairly good uptake, and what's encouraging, I think, for investors as well to look at is that the Apple Watch is also going to have better than average profit margins. So we're going to be looking at here at profit margins arguably rising rather than falling.
So I hear you implicitly saying that the Apple Watch is going to drive iPhone sales at least marginally higher.
Actually, what I would say is that the prospect that to the extent that iPhone 6 and 6 Plus sales are being as successful as they are, actually has the opportunity to drive Apple Watch sales. Mm-hmm. So you'll have a nice add-on. And the thing to think about here is that even if you look at the average selling price for an Apple smartphone being somewhere in the area of about, say, $660, average Apple Watch prices most likely will be coming in perhaps somewhere higher than that.
You have a stock price target of about $180 a share, which is roughly 35% from current levels. How do we get there? What does the market have to revalue to take the stock there?
Oh, first and foremost, I mean, Apple currently trading at about 15 times or so this current year's estimates for earnings. The company's growing their earnings at probably better than a 20% rate. So you've got a company who, on a price earnings basis, is trading at a discount to its growth rate. A lot of that discount, I think, is due to the fact that people have been concerned about this dependence on the iPhone. As we start to see the success of products like an Apple Watch, as we start to see broader portfolio strength, if you will, then I think it's not unreasonable to see technology stocks trade in line with their earnings growth rate. And with a company like Apple trading at a discount, this is a gap which, if it closes, just to get 1 times its growth rate, is what's going to get you on current earnings numbers for this year and next up to the $180 level.
Very quickly, if you could pinpoint one risk to that hypothesis and to Apple's stock price, what would it be?
I think that some of the concerns people have looking at larger addressable end markets, such as perhaps the possibility that Apple would get into the car business. Obviously, there are always risks as to how companies enter new markets. Clearly, I don't think Apple has any business going out and manufacturing cars, but that's not to say that they shouldn't be in the business potentially of designing cars that are made in collaboration with other companies. It's a question here of how well is Apple actually executing on the strategy to go into new end markets. I think what investors have to take away from the launch of the Apple Watch and the success that it's seeing is that we should have some greater confidence that management does know how to expand the product portfolio and start to value the company accordingly.
All right, David, thank you. As always, great to hear from you. David Garrity with GVA Research.
Thank you, Todd.
You bet. Stocks started higher this day with the S&P and the NASDAQ hitting new intraday highs, but the gains didn't stick as biotech shares turned a little bit lower. By the close, the Dow Jones Industrial Average was off 42 points. It finished at 18,037. NASDAQ snapped its 5-day win streak, falling nearly 32, and the S&P 500 dropped 8. Well, despite the down day, though, positive trends are emerging in the market, and the bulls are looking to some big events this week that could move stocks. Bob Bazzani has more now from the New York Stock Exchange.
Stocks ended the day in the red, but still we are just off record highs. This is a great relief to everyone who worried that the market could not possibly advance once the Fed stopped its QE program, and certainly not within a few months of the Fed raising rates, which seems likely later this year. With the Fed meeting this week, the big question is, how will they characterize the economy? Will the Fed statement be enough to get us decisively out of the trading range that we've been in? The economic data has certainly been choppy, with Q1 GDP now expected to be up a measly 1%. Yikes. However, I think there's a good chance the Fed will say that the 3 factors that have been moving the markets, the bad weather, the weak oil, and the strong dollar, are all likely temporary and are now reversing. And indeed, they are reversing. West Texas Intermediate in crude is near the highs of the year, while the dollar's rise has stopped and even declined since its highs in mid-March. And traders say those factors hold the key to more stock gains ahead. Now, the strong dollar in particular has been a mess for multinational companies. Just look at the difference in earnings between the big cap S&P 500, where many companies get more than half of their revenues overseas, and the small cap S&P 600, where most get little, if any, revenues overseas. The S&P 500 has revenues down 3.4% in the first quarter. The S&P 600 revenues up 5%. Wow, that's a difference of more than 8 percentage points, and that's largely the strong dollar hurting the top and the bottom line. For Nightly Business Report, I'm Bob Bazzani at the New York Stock Exchange.
Applied Materials and Tokyo Electron have scrapped their merger plans. The multi-billion-dollar deal would have created one of the world's largest semiconductor equipment manufacturers. Both companies said they didn't believe they could get antitrust approval. Shares of Applied Materials dropped sharply in trading today, as you see there, down more than 8% in 1997. The board of the generic drug maker Mylan rejected rival Teva Pharmaceuticals' unsolicited $40 billion takeover offer. Mylan says the offer grossly undervalues the company and says it remains committed to pursuing Ireland's Perrigo in a separate $32 billion proposal that was spurned last week. Shares of all three, Mylan, Teva, and Perrigo, ended lower today. Well, a probable new outbreak of bird flu has been found in 4 Iowa poultry farms. The Iowa Department of Agriculture says the new case affects nearly 2.3 million birds. That brings the total number of confirmed and probable cases out in Iowa to more than 6 million birds. Well, today, Chipotle, which bills itself as a healthier fast food alternative, became the first national restaurant chain to offer a menu completely free of genetically engineered ingredients. It's taken almost 2 years to eliminate foods made with genetically modified organisms or GMOs from its supply chain, but Chipotle says it's all part of rethinking the way we eat. As of today, if you want your food free of GMOs and you want it fast, you can get it at Chipotle and at its Shophouse Southeast Asian Kitchen restaurants. GMOs are genetically modified organisms, most often engineered to improve production, sometimes to resist certain pests or require less water to grow. GMOs are regulated in the U.S. by the FDA, and they're surprisingly prevalent. More than 90% of the corn and soybeans produced here are genetically modified. Chipotle's move has been in the works since it became the first chain to voluntarily disclose which foods contain GMO ingredients. Founder Steve Ells downplays any financial impact and sees today's move as a natural next step.
I wouldn't think about the removal of GMOs as being a significant hurdle financially. But for years now, we've been committed to what we call food with integrity. And so the removal of GMOs is just a natural evolution of that. Still,
Chipotle's standards sometimes do eat into its results. First quarter sales were up more than 10%, but that was short of estimates, a miss Chipotle blamed, in part, on an ongoing pork shortage because Chipotle refused to sell meat it claimed came from farms that mistreated animals. GMOs have long been a source of controversy. Many countries, including Australia, Japan, and much of Europe, restrict or even ban the production and sale of genetically modified food. Chipotle and others argue that more studies are needed to determine the long-term effects of eating food with GMO ingredients, though they've been deemed safe by both the FDA and the World Health Organization. Even if they are safe, though, consumer tastes have been changing. Last year, for example, General Mills responded to concerned parents by switching Cheerios to all non-GMO ingredients, and Whole Foods will require all of its suppliers to label GMO products by 2018. Since the early 1990s, Chipotle has staked its claim as a healthier fast food alternative, an early adopter of what appears to be a fast-growing trend. And today, shares of Chipotle closed higher. They finished at $643 a share. Now to the West Coast, where labor troubles have returned to the nation's busiest ports, but this time it's not a dispute between shipping companies and the international longshoremen. This time it's different. Morgan Brennan reports.
Just as the country's biggest port complex was starting to recover from congestion, another labor strike has struck. Today, truck drivers hauling containers for 4 companies took to picket lines at the West Coast ports of Los Angeles and Long Beach. The gripe? Job classification. Drivers at Pacific 9 Transportation, Intermodal Bridge Transport, Pacer Cartage, and Harbor Rail Transport are considered independent contractors. But they want to be company employees, a move they say would result in better wages and workplace protections, not to mention the ability to unionize. But trucking companies counter that the pay is good, that it has to be with a driver shortage, and that this strike doesn't represent the majority of workers. Analysts don't expect this strike to majorly disrupt operations, at least for now.
I don't think it'll last that long because these are really high-paying trucking jobs, and it makes the equation a little easier to negotiate. If we were to see an extended slowdown, we could see everyone affected, from the Burlington Northerns and Union Pacifics, the railroads, to those that pull away loads directly from there, whether it be the J.B. Hunts, the Swifts, the Knights of the world. But it's really premature to make that kind of a concern.
Several similar strikes at the ports over the past year had little impact. With only a few hundred drivers out of the port's 16,000 picketing, the ports are still open for business. But experts say the situation sheds light on a much bigger issue. What happens if these drivers succeed in being recognized as company employees?
If you disallow independent contractor status, then you have much more expensive employees at your hands. You have to go buy those assets. You have to start paying Social Security tax on them, Medicare tax, withholding. It becomes a completely different situation, both from a legal labor perspective as well as from a tax perspective, as well as you have to buy the assets that they currently themselves buy and maintain.
Strike aside, this debate has been making its way through California's court system, where truckers have been filing misclassification suits. Since last fall, 2 high-profile cases have already been found in favor of drivers. For Nightly Business Report, I'm Morgan Brennan.
Still ahead, the brand new companies that are cashing in as home remodeling goes digital. Corinthian Colleges is closing its doors. The for-profit college is shutting down its remaining 28 campuses in what's believed to be the biggest shutdown in the history of higher education in the United States. Corinthian says it is working with other institutions to help the displaced more than 16,000 students who now won't get their degrees. The announcement comes a few weeks after the Department of Education fined Corinthian $30 million for misrepresenting job placement data. And last year, the government cut off the school's access to federal aid. Well, for those ready to start their college careers, this is decision week. For millions of high school seniors, May 1 is the deadline to make final college decisions and send in a deposit to secure a spot in the freshman class next fall. For many, a major part of this decision involves evaluating the financial aid award letter. And Sharon Epperson joins us now with more on what to consider. It is an emotional decision that you really sometimes can't separate purely from dollars and cents. But what are the things that families need to consider?
Well, in terms of dollars and cents, they really need to think of the cost of attendance for 1 year and look at what that includes: tuition fees, room and board, and also the cost of travel. Also look at what scholarships and grants may be offered and what they say in an award letter about federal aid eligibility. The key here is to look at this awards letter. You've gotten the acceptance letter. That's where the emotion comes in, the excitement. The award letter for financial aid is where people really get sticker shock and see what they're really going to have to pay.
How do they go about calculating the actual final bottom line number that's going to affect them?
Well, the first thing is they need to consider what's in there in terms of the money that they're talking about. Are they talking about free money? Are they talking about scholarships and grants? That's what you want to look at first, of course. And then there's earned money. So a lot of times in a financial aid package is a work-study program, which you have to think about: how many hours a week is the student going to have to work? Will they be able to find a job? How much are they going to get paid? How will that reduce the actual cost? And then also think about the federal student loans that they're getting. That, of course, is borrowed money. And so you really want to be careful that you don't borrow too much, then you can really afford to pay back.
How can a family actually do the number work to figure out what they can actually afford to pay?
So first you look at the cost of attendance and make sure that you include what the school will include in terms of direct costs, but also those indirect costs. They're going to school in California, you live on the East Coast. That's a big travel bill that you want to make sure you cover in there. And if they have to live off campus, what is the total cost of housing? All of those things that may be somewhat intangible, you want to try to nail down as best you can for the cost of attendance. Then subtract from that the financial aid that is free, the scholarships and the grants, and what you have as a result is the net price of the cost of going to that college.
And that's what's going to have to come out of your pocket.
And that's what's going to have to come out of your pocket, or that you'll have to get.
Where quickly can people get more information to help them through this process?
Studentaid.ed.gov is a great website to go to, the Department of Education's website, to find out about different programs that might be available. And then also look at Sallie Mae and at edvisors.com. A lot of great resources there.
All right, Sharon, great.
Sure.
Good to see you.
My
Sharon
pleasure.
Epperson. Procter & Gamble plans to cut advertising costs, and that, folks, is where we begin tonight's Market Focus. The consumer products maker, which is the world's largest advertiser, wants to spend a lot less on marketing. Maker of everything from Pampers to Gillette razors says it will cut costs by $500 million to help other parts of its company accelerate growth. Shares were off a fraction, $80.60 the close. Activist investor Nelson Peltz has a key ally now in its fight for influence at DuPont. Institutional Shareholder Services, or ISS, recommended that shareholders give the billionaire investor seats on the company's board. This as Peltz's Trian fund is pushing the chemical maker to split into two companies. Shares 4.5% higher today at $74.81. Big miss from the Container Store. That sent that stock as much as 25% lower after the close. The company's quarterlies and revenue came in well below estimates. The retailer blamed weather, among other factors. Shares, as you can see, were way off initially after the bell. Before the close, the stock was up 1% to $21.69. Watch that one tomorrow. Tough day for the drug maker Acorn Pharmaceuticals. Investors got a chance to react to an announcement that the company will restate its earnings from the final 3 quarters of 2014 and that its first quarter filing for 2015 is probably going to be delayed. This is some of the previously announced financial information turned out to be wrong. Shares fell 22% to $43.10. Well, as home values rise, homeowners are gaining much needed equity and they are putting it to work. Home remodeling is on the upswing again, and so are the brand new companies behind popular remodeling websites. Diana Olick has our story.
Before the dumpster comes in or the drywall goes up, the mouse designs the house. Homeowner Stephen Gately, who used to hoard home improvement magazines, went online at the suggestion of his design build firm.
You could give them an idea of what you liked, disliked, and it made that design process, it gave the designers a sense of who we are and what we're looking for in terms of the new space.
Gately went on to House, a website that has grown into a remodeling marketplace valued at over $2 billion.
I think that the fact that the vendors were there, the manufacturers were there, as well as the homeowners ready to do that, and they really wanted House to become the place where they do everything.
I view it honestly as an added cost of doing business.
Remodeling websites are not just a destination for homeowners, but a necessity for remodeling professionals.
Most of us got in this remodeling business because we love the smell of sawdust, we love design, we're passionate about homes, and as you said, now we have to be experts in social media and, all these other platforms.
$29.50. And the competition is growing fast.
Take, for example, Seattle-based Porch.com, a company that connects homeowners with home improvement professionals. They started in this space just over a year ago with barely 100 workers. They're busting out, literally taking on 75,000 square feet of new space, expecting at least 600 employees by year end.
It's nice to have wins at our back.
Porch got into the market in late 2013, just as home equity took a huge leap. It offers consumers both professional contacts as well as historical information and visuals of local area renovations.
Focusing on aggregating this data set that nobody else has, focusing on building these partnerships that nobody else has, like Lowe's and Realtor and all these, really set us up to build products that others can't. And that just gives us a really big advantage.
Porch has garnered $100 million of investor capital so far, says Ehrlichman, and with the $300 billion remodeling business at their doorstep.
I have several magazines in the house that I'm like, I think I can get rid of these now.
These companies have an awful lot to build on.
For Nightly Business Report, I'm Diana Olick in Seattle.
House is funded in part by the investment arm of Comcast, parent company of CNBC, which produces this program. And coming up, can a company headquartered on the other side of the globe take on Apple, the richest company on earth, on Apple's home turf? Here's a look at what to watch tomorrow. Pfizer, Merck, and UPS, just some of the companies to report their earnings before the bell. The Federal Reserve begins its 2-day policy meeting, and consumer confidence for April will be released. That's what to watch tomorrow. Well, as we told you earlier in the broadcast, Apple saw its iPhone sales surge, but now there's another smartphone maker that's trying to get the attention of American consumers and compete with Apple head-on. Eunice Yoon has more.
These Chinese phones claim many firsts. First to use a special USB port for charging, first to support wireless HDMI, first to compete directly with the iPhone 6 on Apple's home turf. The Le 1, Le 1 Pro, and Le Max are the products of Chinese company LETV. You probably haven't even heard of it, but in China, LETV is a popular streaming site for videos and live TV, sort of like a Netflix, but with its own movie studio, smart TVs, and now branded phones to rival the iPhone 6.
LETV's phones are high-end. They're competitive with Apple's on specs, but they're much, much cheaper. For example, the Low One costs about $246, and the Low One Pro sets you back about $410.
The idea, the company says, is not to worry about the low margins on the phones, but to make money off of memberships to its massive library of TV shows and movies. LETV's site offers everything from Chinese series to American favorites like House of Cards and sports events like the NCAA, drawing daily viewership, the company says, of more than 500 million.
LETV plans to start selling its phones in China in May, and it hopes to market the Low One Pro in the U.S. and have it here by the end of the year. But some critics say that the company is in over its head because, unlike Apple, it's never made phones before.
Some also believe LETV's venture into America won't work well, since most of the content is in Chinese. The company, though, says it's targeting the Chinese communities here first before reaching out to a bigger audience. It aims to sell 3 million phones in the first year, still a fraction of Apple's iPhone sales, but just the start, LETV says, of its global ambitions. For Nightly Business Report, I'm Eunice Yoon in New York.
And that is Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks for watching. Have a great evening, everyone, and we'll hope to see you right back here tomorrow night.